What if the future of investing isn't in Wall Street but in your very own digital wallet? Let's take a step back into the early days of investing, to a time when money didn't even exist. Yes, you heard that right. The barter system ruled the roost, where goods were simply exchanged for other goods. But as societies grew and diversified, this system showed its limitations. Imagine trying to trade a cow for a basket of apples. Not really practical, is it? Enter gold. Shiny, malleable, and durable, it was adopted as a universal store of value. It was tangible, you could hold it in your hands, feel its weight, and it had the power to shape economies. Kings and queens amassed it, wars were fought over it, and economies rose and fell with it. Gold became the backbone of global trade, transcending borders and cultures. It was more than just a shiny metal. It was a promise, a guarantee of value. If you had gold, you were wealthy. It was as simple as that. Now, it's important to remember that gold was not just a means of exchange, it was also an investment. People realized that by holding on to gold, they could preserve their wealth and potentially even increase it. This was a game changer. It meant that individuals could accumulate wealth over time, passing it down from generation to generation. This idea of wealth preservation and accumulation is at the very heart of investing. It's about more than just making a quick buck. It's about growing wealth over time, securing financial stability, and achieving financial freedom. Gold, in its glittering simplicity, set the stage for this. It was a tangible asset, something you could hold, something that held its value. It was reliable, it was trusted, and it laid the foundations for the world of investing as we know it. But as we'll soon discover, the world of investing was far from complete. Gold set the stage, but the world of investing was only just getting started. As societies grew, so did our investment horizons. Was land the next gold rush? Let's take a step back into history and explore the rise of real estate as a major form of investing. The concept of land ownership has been around for centuries, but it wasn't until the Industrial Revolution that people started to see real estate as a viable investment. As populations grew, so did cities. This urbanization transformed vast tracts of farmland into bustling metropolises, and the value of land skyrocketed. Imagine you're a farmer in the late 19th century. You've been tilling your land for generations, but now, the city is creeping up on your doorstep. You sell your land for what seems like a fortune, and the buyer? They turn it into a block of apartments or a factory, and make an even bigger fortune. This was the birth of modern real estate investing. The realization that land and buildings could be more than just places to live or work. They could be assets that generate wealth. But the real game changer? That was the introduction of mortgages. Now, you didn't need a pile of gold to invest in property. With a small down payment and a promise to pay the rest over time, anyone could become a real estate investor. The mortgage system democratized real estate investing. It was no longer the exclusive domain of the wealthy. From the suburban homeowner to the urban landlord, everyone could have a piece of the real estate pie. Of course, it wasn't all smooth sailing. There were booms and busts, bubbles and crashes. But through it all, real estate remained a cornerstone of the investing world. So, was land the next gold rush? In many ways, yes. The development of cities and the introduction of mortgages turned land into a valuable commodity. It was a new frontier, a chance for people to stake their claim and build their wealth. But as cities rose, so did a new kind of investment landscape. Enter Wall Street, the game changer in the world of investing. But was it really a game we all could play? In the late 18th century, a group of 24 brokers and merchants in New York decided to create a structured platform for trading securities. This was the birth of the New York Stock Exchange, the precursor to modern stock markets. Stock markets, as we know them today, are dynamic, bustling hubs of economic activity. They act as a barometer for the overall economic health of a nation, reflecting the performance of its corporations. When companies do well, their stock prices rise, and investors reap the benefits. When they don't, the value of their shares falls, and investors can lose money. It's a high-stakes world of risks and rewards. But here's the thing. Stock markets aren't just playgrounds for the rich and powerful. With the advent of stocks and bonds, investing became more accessible to the average person. Sure, there were still barriers to entry, but for the first time, ordinary folks could own a piece of a company and share in its successes or failures. This democratization of investing marked a significant shift. Money was no longer the exclusive domain of the wealthy. The playing field, while not entirely level, was certainly more accessible than ever before. However, let's not sugarcoat things. The stock market can be a fickle beast. It's influenced by a myriad of factors, including political events, economic indicators, and even investor sentiment. One day you're riding high and the next you're in the pits. So, was the stock market a game for everyone? Well, not exactly. But it was a step in the right direction, opening doors and creating opportunities for more people to grow their wealth. And there's another thing to remember. The stock market isn't just about making or losing money. It's a vital engine of economic growth, helping companies raise capital for expansion and innovation. And just when investing seemed to have found its footing, the digital age descended upon us. Digital assets, a passing trend or the future of investing? The world of investing has witnessed another seismic shift with the rise of digital assets, a new breed of investments that are turning heads and turning the tables on traditional investing norms. Cryptocurrencies, led by the poster child Bitcoin, have burst onto the scene in the past decade, bringing with them a wave of change. Unlike traditional assets, they're not backed by physical commodities or government guarantees. Instead, their value stems from the innovative blockchain technology that underpins them, offering transparency, security, and decentralization. The appeal is undeniable. Cryptocurrencies offer a level of accessibility unheard of in traditional markets. No matter where you are in the world, if you have an internet connection, you can partake in the crypto market. This is a democratic revolution in investing. Then we have non-fungible tokens, or NFTs, a new form of digital asset that's causing quite a stir. These are unique digital items, from artwork to virtual real estate, that are bought and sold on the blockchain. They've opened up entirely new avenues for creators to monetize their work, and for investors to diversify their portfolios. However, it's not all sunshine and roses in the digital asset garden. Volatility is a hallmark of this new era. Cryptocurrencies can swing wildly in value, leading to both exhilarating highs and heart-wrenching lows. NFTs, too, are a speculative market, with values determined largely by hype and demand. The risks are real, but so too are the rewards. Many early adopters of digital assets have reaped significant returns. Yet, like any form of investment, it requires understanding, strategy, and a healthy dose of caution. The digital asset era is upon us, and it's reshaping the investment landscape. We're seeing the democratization of investing, the rise of new asset classes, and the potential for significant returns. But we're also seeing increased volatility and risk. So, is the future of investing digital? Only time will tell. So, what's next for the world of investing? We've journeyed from the tangible weight of gold to the ethereal concept of digital assets. This evolution has been marked by significant shifts, from physical assets like real estate to the hustle and bustle of the stock market, and finally the digital frontier of cryptocurrencies and NFTs. Looking ahead, we might see even more regulation of these digital assets, ensuring their stability and security. Additionally, we can expect the emergence of more accessible investing platforms, further democratizing the investment landscape. Technology will continue to shape the future of investing, making it more inclusive and dynamic. The very essence of what we consider value might transform as we lean more into the virtual realm. No matter what the future holds, one thing's for sure: the world of investing will never stop evolving. Are you ready to evolve with it?